paper gold prices are stuck in a very strong tug of war or cross current, and that is why the paper price for gold is in a trading range and not doing anything right now. So let me explain this a little further. On one side of this tug of war, or one of the cross currents, you have paper price manipulation. You have the mainstream financial media, which puts out these narratives that are almost always, I would say 90% or more of the time, anti-gold. Everything is spun to be anti-gold. So if the Fed is debating raising interest rates, that is bearish for gold. If the Fed is debating lowering interest rates, that is bearish for gold. If interest rates move a lot up or down from bond traders, that is also bearish for gold. If the dollar index rallies and goes up, that is bearish for gold. If the dollar index gets weak, that is spun to also be bearish for gold. And other types of scenarios are also spun by the mainstream financial media to be bearish for gold. On top of this, you also have hedge fund managers, a lot of managed money. A lot of these guys worked on Wall Street. They worked at Wall Street investment banks. They work for bullion banks. They're Keynesians. A lot of them have PhDs in economics or MBAs from Harvard, Princeton, Yale, Wharton Business School, Stanford. And they were trained through mainstream economics departments to hate gold. They also are deflationistas, and they do not like gold. So the overwhelming majority of the time, Wall Street, the mainstream financial media, and professionally managed money, most hedge fund managers, I would say over 75% of hedge fund managers, the majority of time hate gold. Also, you have bullion banks, which are heavily involved in manipulation besides the plunge protection teams, the Federal Reserve, the US Treasury, the Exchange Stabilization Fund. The bullion banks actually make enormous profits from shorting paper gold, so shorting gold derivatives and gold futures contracts. There's an enormous amount of gold derivatives both here in the US and in London over the counter on the LBMA. And they also make enormous commissions from moving large tonnage orders of physical gold to central banks. So the bullion banks actually make more and more money by shorting paper gold with futures contracts and options and derivatives, but they also make enormous commissions moving physical metal at the lowest price possible to their central bank clients, which are also creating currency out of thin air and buying physical gold. You have a ton of central banks now creating currency units out of thin air and buying physical gold with it. And this leads me to the other side of the tug of war. And this is why gold prices, paper gold prices, manipulated paper gold prices are not much lower, why they've been stuck around $1,800, give or take $20, $30, $40 now for the last 8 months or so, give or take. Why they've been stuck around that trading range is because on one side of the tug of war, you have the things that I've mentioned, and that's very powerful. And on the other side of the tug of war that's creating this trading range is enormous increases in demand for physical gold. You have big retail investor demand for physical gold increases in India, in China. The data out of India is still going up for retail physical gold demand. The demand for physical gold out of China is still rising. And then you have news stories that have come out in the last couple weeks that in 2021, it was the largest amount of physical gold purchases of net increase by central banks in 31 years. And yet the gold price was flat. Think about this rationally from a manipulator standpoint. The only way, and no other commodity would be affected by this, if demand was increasing that much, the only way to prevent demand from moving the price higher would be to manipulate the price down, have the mainstream financial media control the narrative and spin, and have high-frequency trading algorithms at 4 a.m., 4:30 a.m., smash the shit out of the paper gold price, and have hedge fund managers that are overwhelmingly bearish on gold and want to short gold because of their bias of being Keynesian, being deflationistas, having a PhD in economics, whatever. They do have enormous biases that are anti-gold, though, helping keep the gold price capped. So on one side of the tug of war, you have all the things I mentioned in the first couple of minutes of the video, and then on the other side of the tug of war, you have big increases the last 18 months, especially since January 2021, and it's still ramping up for physical demand for gold, both from net central bank purchases. You have central banks, over half a dozen central banks that have bought large tonnage orders of physical gold, and they have not bought physical gold in 20, 25, 30 years. And then you also have big increases lately, especially starting over the summer. But China, the demand actually started before that due to economic problems and other problems that I've highlighted in previous China and gold videos. You have enormous retail investment demand for physical gold. For American citizens, I think it's a little different, although people are still buying metal. Unfortunately, the way physical gold is taxed here in the United States, I don't really view it as an investment. So unfortunately, you will continue to see headlines like the Wall Street Journal article I put in the red box there. Gold notches its largest percentage decline since 2015. No mention of all the physical demand increases, the central bank purchases, the demand increases, and that's what's preventing the paper gold price from totally crashing, is that the demand side for the actual physical metal is overwhelming. But the tug of war that's going on is so powerful, that's what's keeping paper gold prices in this trading range now, stuck around 1800. Finally, if you like content like this and want to help keep content like this free so it doesn't all end up behind a paywall, or you want far more in-depth content, research, financial education, and analysis than I provide in these short little free videos, there are now over 190, I think it's almost 200 now, might be a little over 200 now, articles and audio podcasts behind my paywall, exclusive for patrons, all for the cost of a Starbucks cup of coffee per month. I think it is one of the best deals out there. And there are now, just in the last 25 or so weeks, 37 new articles and audio podcasts, including 6 new audio podcasts out in the last month or so. I just put out a uranium market update in the last couple days. There's been some interesting news stories coming out on the uranium market, and hopefully in the next week or two, there will be additional audio podcasts out on gold and silver mining, maybe something about base metals and oil and natural gas. I will try to get some additional audio podcasts out in the next couple weeks, depending upon my health problems, which are very difficult to predict. So if I could wrap up this short little video very quickly, the paper gold price is still stuck around 1800. There are powerful forces that I outlined earlier in this video pulling on each side of this gold tug of war, and that is keeping the gold price in a trading range. There are powerful forces that do not want the gold price higher, and yet the demand for physical gold is increasing. It keeps increasing, actually. Now, who is getting hurt from all this paper price manipulation? It's the retail investor here in the West that is hoping for much higher gold prices. It is also gold and silver miners that have seen their cost increases go up a lot, double digits in the last 20 months. Cost increases are up a lot, and now a lot of these mining companies are going to have very difficult problems raising equity. So if costs continue to increase and metal prices do not rise to offset the cost increases, and you also have governments starting to increase royalty taxes in a lot of different countries, making it even more difficult for miners all over the globe, in 2 years or less, the miners are going to be in big, big trouble. Sentiment-wise, this is some of the worst sentiment I have seen for gold and silver miners and the gold sector since 2015 or 2016. I am seeing a lot of friends that used to be bullish gold sending me messages that they quit, that they've given up, that they've sold their gold stocks. In the past, normally this meant that within 6 months or less, the market had bottomed and was slated to move higher. So sentiment-wise, I think we're getting very, very bearish on gold stocks. But the royalty and streaming companies, the larger ones like the Franco-Nevadas, the Wheaton Precious Metals, they will be taking advantage of this in the months to come. But with the increase in physical demand, eventually the paper price will respond to it. It will overwhelm as mining supply does not keep up with demand increases for physical metal.